Hi, fighters. How you doing? Travis here from Carter Cow Capital, helping you fight for your financial freedom throughout the forex market through education and automation. It's been a few weeks since I actually placed it up a video on YouTube and Facebook, and I do apologize for being able to get that done. What I've actually been doing is been private coaching through the precision entry point trading system, and really been focusing on the clients that I actually end up getting within that time. So, with that being said, we actually end up getting through a session, and I wanted to go through some of the pairs that we're actually going through, which is basically U.S. pairs. And also, I wanted to talk about what we have going on over the course of the next 3 months to the next year. And I'm very excited about some of the stuff that I'm going to end up showing you. It's going to end up being brief because I'm still working through some of the forward testing, some of the things that end up being ready this year, some of the things that I'm going to end up showing you will end up coming out next year. So without further ado, I do want to go ahead and jump into a few pairs. We're going to only focus in on the U.S. pairs today. It's not going to end up taking that long. And also, I end up showing you how that kind of ties into what are the things that I've been working on since my last few videos. So the first pair that I actually want to get into is the U.S. Canadian dollar. What happened with the U.S. Canadian dollar was this, and like always, what we end up doing, we just break it down and take a look at from a monthly time frame to a daily to a 2 hour, and then after that, make our decision. So from a monthly perspective, what had happened was that it ended up breaking a counter trend line with this bearish engulfing candlestick. And typically, once it breaks a trend line, it typically goes to a outer trend line. So it's moving its way towards the outer trend line. That number is right around 1.31. It has been moving towards that number, and if it does break this outer trend line, then after that, it's going to end up going and continuing being bearish. So I expect that if it does break that, then it's going to end up typically going, well, it can end up going to the next pivot line, which is right around 1.30 all the way down to 1.28. So with that being said, the idea and the thought process will end up being, let's look at what the bearish movement is, and let's see if we can be able to get in some. From there, what I ended up doing was I ended up taking a look at it. The Fibonacci's ended up giving a retracement up to the 786 level, and that was about that was in September. We end up first trading this as a sale and end up taking that down, and we end up making that a profitable trade. Since then, we kind of stayed out until a counter trend line break ended up happening. And I didn't want to do anything until we end up hitting this monthly number, which was 1.33 as a figure, because I felt like if it was going to end up remaining where the stochastic RSI was going to end up being basically in a push zone, which means that the bulls are not controlling or the bears are not controlling, it would go based off of what the overall direction was, but the movement would end up happening swift, and you would kind of have to stay out of it. So if we're just looking at this from a stochastic perspective, then we probably wouldn't stay in this trade based off of the precision entry point rules. And once again, I have dedicated videos and classes and webinars based off of that. So we'll talk about that from a different standpoint a little bit later if you're interested. But with one of my other systems, it actually ended up picking up the movement, and it felt like there was more momentum from the downside in this area, which was right around 1.33. So it actually ended up taking a sale. With this pivot level, remember we ended up saying that we wanted to take a sale. We ended up taking that sale position. Right now, as we speak, I'm looking at where we're at on this system. And I'm actually getting ready to switch it over so you can kind of get a brief view of what the system is. The sale actually ended up happening. We ended up getting into it right around 1.33, or right around that target where we said that we wanted to sell down to. And last week, the target ended up going down 131 pips. From there, ended up retracing back, and right now, currently, as we speak, before the market actually opens up, is up 170 pips. And I think that it has a little bit more room to go, at least until 1.31, before it actually ends up hitting. And what you're looking at right here is the marathon trader, which will actually end up being out within 2020. Really shooting for early March. For the system to be able to come out. We're actually doing forward testing on it right now. I'm very excited about the system, but I end up letting the automation system pick up the best position to be able to trade this one out of. But even with that being said, we go through, and the question is, what do we do now? Well, the thing that we do now, because we're still in the trade right now, is to sit and wait for it to go to 1.31 and see what decision it's going to end up making. If it breaks to the downside, then we stay in the trade and we just go from there. Now, if it ends up rejecting more to the upside and it starts to go up, we look to take profit, try to see if we can get it at a higher price. I don't believe that it will hover around 1.31 and not do anything. It'll probably end up bouncing back up to 1.32 before actually going down. But if you're looking at the actual Fibonacci's, the Fibonacci level from where we're at right now is saying that the overall number that it's going to end up going to is 1.28993. So we can assume that it's going to possibly end up moving down to 1.29 at least before it starts to really push towards the bull's favor. And so overall, in the next few months, I am looking to stay bearish. I do believe that there's going to end up being some retracement, and that's going to be a test at this trend line since it has been moving and has been pushing towards this trend line. But from there, we'll see how it kind of moves from there. But that was the first pair, which was the U.S. Canadian dollar. The next pair I want to go ahead and talk about, since we're looking once again at U.S. based pairs. Let's look at the the Australian dollar versus the United States dollar. And if we just look at this pair, what ended up happening was that there was a very big move for the Australian dollar's favor. And the reason why that ended up happening was because it ended up hitting a monthly retracement level, or it basically almost hit a monthly retracement level. If you look at the target that we was actually going for at the beginning, we were selling down to at least 66, basically 66.60. And based off of that position, we felt like it was going to end up pushing back up and retracing back up from there. But if there was some more bearish movement to the downside, then we possibly could be able to get it in. But the reason why the bulls actually end up controlling this more than anything else was outside factors that end up happening with the United States dollar. And because of that outside factors, it allowed the Australian dollar to actually end up going up. So what I do expect from right here is this. There has been a retracement, and we're looking for a retracement toward the upside, but I do believe that it's going to end up still being more bearish toward the downside. It did not fulfill the 65. It did not fulfill the 66. Well, it did fulfill the 66.60 movement, but I think the new target that we're going after will end up being right around 64.82, or basically 6,500. So if we're looking at this actual movement from where we're at right now, and if we end up moving this down and say that is our new target, basically 6,500, the thing that we need to look for are basically high prices. So from a high price standpoint, the last pivot that it actually ended up going up to, which was a monthly pivot, was right around 68.75. So right now, from last week, it is pushing up to this point. If you notice, it actually ended up rejecting off of that point before. It actually ended up rejecting off of that point, and turn this into support right here, and turn this into resistance right here. So I do expect some type of movement is going to end up being within this area right up here. So I at least expect the early parts of the week that the Australian dollar is going to end up going up. If there's any type of good news for the U.S. dollar, then I do expect that the market is going to end up pushing back down. And then after that, fulfilling that Fibonacci movement all the way down to the 618 level. So to kind of give you another example about another thing that we have going on in our systems and everything else like that, what you're looking at right here is the FX Striker Auto. The FX Striker Auto comes in two different versions, and this is fully automated, which means that all you have to do is click on a button and then go from there. I'm very excited about it because there is two different expert advisors, or two different automation systems that you're going to end up receiving, which means that one is going to end up focusing in on larger time frames, one is going to focus in on shorter time frames, and with both of them being able to read the different time frames, it allows you to be able to get inside the best trades within this market and be focused in on them type of trades. So you can be able to hit it from a short term, and you can be able to be in swing trades from a long term perspective. Right now, this is basically showing in the same things that are going on with the market right now. The bulls have controlled what has been happening over the course of the last week and a half or so. We do expect that that's going to end up being a high price. Once we end up getting a high price, then we'll look to sell back down to wherever the Fibonacci retracements is. But once again, because this is fully automated, then this basically makes all the trades for you, and you don't necessarily have to sit and stay in front of the computer based off the rules of what is actually being given. Actually end up making the trades for you from there. So right now, the biggest thing is there's not really a position to be able to get in at this point. We do expect that the market is going to end up moving right around this 68, 70 position. So we're going to look to see how it reacts. Around the 0.68750 pivot area. And then once we end up seeing how that reacts around this area, then after that, we can kind of get an idea. Mindset is still bearish, even though that there was bullish movement, and we end up going from there. So that was the Australian dollar, United States dollar. So let's get into the euro, United States dollar. With the euro, United States dollar, it basically the same thing. We go to the monthly time frame. If we go to the monthly time frame, it ended up hitting a bullish. It ended up hitting a retracement level. From there, it ended up being bullish. If you notice, there was a real big bullish engulfing candlestick, which has controlled this area, which means that the Eurozone has been way stronger than the dollar over the course of this month. And from there, you do expect that it's going to end up pushing back and retracing back up before it actually goes back down to its actual target 1.0500. So with that being said, looking at it before, my overall mindset was that it was bearish. And from that movement, I actually ended up trading it down to its actual bearish zone. But now, because of this movement going toward the upside, we do expect that the market is going to end up pushing toward the upside. So that means that when we're looking at that from a overall perspective of how the market is going to end up moving from a bullish perspective, I need to trade accordingly. So with that being said, we go to the daily time frame. From the daily time frame, we see that the market ended up going down, almost fulfilling that, almost fulfilling that 1.618 level, and then after that, ended up retracing back up. From this retracement, it has got up to a high price. And based off of this high price, the one thing that we're looking at right now is how is it going to end up reacting off of 1.12. 1.12 has been a level where there has been a lot of resistance for it to be able to break. If you notice right here, it did not break in this area. You notice right here, it turned it into support right there. You notice right here, did not break, hover around that area, and then after that, turned it into support right here at these two levels. So before I make any type of trade, I want to see how it reacts with this 1.20 area. Once it ends up reacting off of that 1.20 area, then I can kind of get an idea about how the market is going to end up moving. Now, I do expect long term that the market is going to end up moving towards the downside. But if we look at the monthly time frame and the monthly we look at the monthly candlesticks and what's been given to us, typically when you end up having a bullish engulfing candlestick, there's two things that ends up happening. One, the next overall movement is going to end up being toward the upside. However, the bears are going to end up testing this toward the downside first before it actually ends up moving and rejecting from there. Now, if this is any type of indication about what ended up happening previously, where the market ended up going down, the bulls end up taking control over the course of the next 1, 2, 3, 4, 5, 6 months, and then after that, all the way up to 1.24, like it ended up doing 2 years ago, then this may be an indication that the market is going to end up really pushing up and then going up to the upside, uh, even past 1.24 and possibly looking at new heights. But from this standpoint, we're looking at this just from a short-term perspective. We have to look at pivots. We have to look at positions to where the market has been at before, and then after that, make the decision on where it's going to end up going. So the next thing that I will end up looking at before anything else, I want to see how it plays out. Right now, it's at a high price, and with the stochastic is saying that it's at a high price. If we look at it, I know that my picture is somewhat jumbled. Let me erase some of this stuff real quick so you can kind of be able to see it. Right now, it's at an 8-6 position, and from this 8-6 position, if it does break down, then the target is going to end up being at 1.0850, and that's more towards the downside. So right now, this is your outer trend line, your long-term trend line, in which it's done bounced off. If I place another trend line up here to kind of get an idea about how it's going to end up moving, it has been parabolic. So a deep push up means a deep push more toward the downside. So this is kind of looking like how the U.S. Canadian dollar ended up moving, to where you have this upside movement, and from there, if it does reject off of this area, it's going to end up testing off of this area and then hitting right below at 1.2125, somewhere around that area, and then after that, testing to see if it's going to end up staying below or pushing back up. So that is my mentality. I do think that it's going to end up being short-term movements. It's not going to be a long-term move coming up over the course of the next weeks or so. If there is some retracement, it's going to end up being a slight retracement and then possibly pushing up more towards the euro's favor. So that's the idea right here. From a short-term perspective, if you would like to trade this, I would say you would trade it with caution. You would trade it based off of scalping. I wouldn't trade this based off of swing trading. I would try to go after a certain number or a certain point. In this case, we're talking about just between these two pivot levels. If it just goes down and hits that, that's right around 78 pips. And to me, for a swing trader and just how much it is, that's not necessarily a point that I would like to get in for a swing trade. So me personally, I would be staying out unless there's some full movement towards the downside that it's going to end up pushing, that it's going to end up having a very big push more towards the downside, which means that I will probably look at it and see if it breaks this outer trend line first from just a manual trading standpoint. Now, with my automation systems are set up to where it's looking at overbought and oversold signals, and if I get an overbought oversold signal and it makes sense, then I'll let the trade run. So Euro US, that's pretty much it. From there, we end up going from there. New Zealand dollar, United States dollar. New Zealand dollar, United States dollar, kind of like the Australian dollar and how it's actually been moving. And I'm going to end up opening this up a little bit and kind of get it to where it's not jumbled up. What ended up happening from a daily standpoint, let's go to the monthly first. What has happened from a monthly perspective is that the market has been rejecting. We wanted to see how it's going to end up moving towards the 68 area. Once it ended up moving towards that area and ended up breaking down to 62.50, which was the long-term target, we said that it was going to end up pushing back up toward the upside, and that's exactly what ended up happening. Over the course of the last 6 months after that counter trend line break in this area has moved down to this very low pivot area. Now, I do expect that the market is going to end up pushing up at least to the 382, and that would be based off of daily movement. So a couple targets to be able to take a look at. 6420 is the 1.27 extension. We'll take a look at 6500, and then after that, there's no pivots until 6720. So this may end up having some upside movement right around 300 to 500 pips, just based off of that upside, area. So going to the daily time frame and looking at where we're at this point. The market ended up retracing down from this triangle, ended up moving towards this area, and actually ended up hitting 62.50, which was the long-term target. From there, From there, if we look at it, it has broke a counter trend line break from this point to that point. With that counter trend line break happening, typically two things happen more than anything else. You have your counter trend line break that ends up happening right here. From there, the market is going to end up pushing up and giving a high price. Once it gives a high price, then it typically goes back down and it tests it one more time toward the downside before it actually ends up going up. And that is what happened right here in this area. The area that I'm talking about is from right here to there. You see that the market ended up pushing up toward the upside, went back down to retest this area for the trend line. Then after that, ended up breaking up toward the upside. So from a bull's perspective, it has pushed up almost 100 pips or more from that area. I do expect for the target to be able to go up a little bit more from the 382 of that area. And let me show you what that area actually is. If we go from here goes your A, there goes your B, here goes your C. The D extension was right there. Let me show you from a Fibonacci perspective. This was from here to here. And it went to the blue from there. End up retracing down. Here goes a new ABCD swing from here. From there to there. All right, so if we're looking at that just from a downside movement, this is two things that I believe that's going to end up happening. One, it's in a retracement zone. And typically when you get in, I would like to be able to look at deep retracements, which means that you would like to be able to get it at the 50% to the 61.8%, which is the golden rule. And once again, we talk about that within my book, The Precision Entry Point Trader, in the strategy system. And once again, email me if you're interested in being able to learn about that system. That's something that we actually end up trading from a long-term perspective over and over again, so it'll end up helping you out. But based off of that standpoint and where we're at, the 382 has not been hit yet. The 382 is at 60. It's right around 64.74, 64.75. So right around that 65 area, which is the support area, which was the pivot again. So essentially what has happened is the market has went down and ended up finding support. It ended up breaking off and ended up pushing back up. Then after that, it ended up finding support at another pivot level. From there, I expect that it's going to end up pushing back up and at least testing 6,500 before you end up having any bearish movement. Now, you notice the stochastic is more in the gray zone, which means that the bulls nor the bears actually have full control. But I do expect that the bulls are going to, I do expect that the bulls are going to end up maintaining control at least up to 6,500. Now, this may end up being a week or so. This may end up being a couple days or so for it to be able to be from upside movement. Outside factors will actually end up playing a huge role in how the market is getting up pushing from this one. But I do expect more than anything else that the market is going to end up remaining bullish at least up to 6,500. Then after that, end up pushing down. So where we at right now? Right now, we're in a position to where we have to wait. We have to wait for at least a high price. Once we end up getting a high price, then we can be able to sell to be able to do anything else like that. If we go from the systems that I have been running and I have been showing, we'll actually end up getting inside of a buy a little bit earlier. I want to say this was on October 16th. So this was on Tuesday, I believe. Let's see, October 16th was Wednesday of last week. So end up taking that right now, up 86 pips from that movement. I actually ended up selling it one time before. I was up right around 52 pips. And if you notice, that is right around the area where they end up hitting the pivot at 62.50. So sometimes when you're looking at trading certain things, especially in automations, you have to be able to be aware of the zones of where pivots are going to end up being placed off. Because if I was doing this manually and I was just paying attention to that actual position and just not letting it run by itself, then I could have took this 44 pips and then after that been okay with this, been okay with the buy once the buy signal actually end up hitting, and then actually going from that area. So a couple things to be able to look out. Of course, we'll talk about all of this stuff within each and every system that we end up doing, but that's one thing to be able to look at. But with that upward movement, I actually ended up breaking me even on the trades that I was actually in. So that's actually a good thing. So once again, this kind of waiting to see what's going on with the New Zealand dollar, United States dollar. I do believe that it's going to be bullish movement. I do believe that it's going to be bullish movement to at least 6,500. So a couple things just to be able to keep your eye on. All right. Next pair that we're going to end up talking about is going to end up being the U.S. Japanese yen. After the U.S. Japanese yen, we're going to talk about the pound United States dollar, and then that'll be it for today. So we go to the U.S. Japanese dollar. What's been happening is a lot of stagnant movement. And what I mean by that is this. If you look and see how the market has been moving from here to here, it's been roaming around that 112 area to 105 area. So it's about 700 pips of actual range movement within the last year or so. So I do expect that the market is going to end up pushing back up and at least going up to 112 again, meaning that the U.S. dollar is going to end up getting control over that. Now, with the trade wars and the tariffs and everything else that's been going on, and reaching baseline deals within the market, I don't know if the market has actually added that into the evaluation yet of the currency pair. So with that being said, you have to be able to look at the pair and notice where it's actually going from a long-term perspective, and then making a decision from there. If we notice, once again, we end up saying that it has been ranging from 105 to 112 and it bounced off of 105 and it started moving toward the upside. So that means that more than likely the mindset should be more bullish, but there's still a lot of options on being able to trade this toward the upside and the downside. But overall, I would say that the idea, if I had to pick a way of being able to trade, I would say looking at buying now more than selling. But with that being said, here's the movement from 112. This is the movement that ended up going from the downside. So when it ended up hitting 112 and going towards the downside, we was only looking at selling. It ended up going to 105. Now it's starting to move toward the upside. So the things that we should be doing now is looking at buying and looking at buying at low prices so we can be able to get a high price from there. So hypothetically, if we were to buy right here, then we would have made, if we would have bought right there, hypothetically, we would have made right around 200 pips from that outside movement if we would have got out at a high price zone. Now, from a manual standpoint, that wasn't an area for me to be able to trade. Once again, that is based off of the way that we end up doing the precision entry point trading strategy. Right now, this movement toward this downside, the only trade that I possibly would have got into would have been this one right here when it actually ended up moving more towards the downside and actually hitting that point. Up here, possibly could have sold and then actually end up making some. Right here, again, possibly could have sold. Would have ended up making some, but if you look at it, we're in the gray zone. So quite frankly, it would have been a non-tradable pair. So right now, what has happened is it's went back up and then found a high price again. And if we're going based off of where we're at in this Fibonacci perspective, it is basically hit 86% of its actual movement, which means that if it moves toward the downside, it's going to break 105 and it's going to end up hitting right around the 104 area as the actual target. Now, that means that the Japanese yen is going to end up being in control over the United States dollar, at least for that slow movement toward the downside. Monthly, the range has told us that that's probably not going to happen, which means that more than likely what will happen will be short-term movements toward the downside, and then after that push back up to 112 if it's going to remain in this ranging area and kind of make more of a V-type shape going back up toward the upside. So I would say keep your eyes out on that. on the way that it's actually moving. If we're looking at just scalping this, I would definitely look to sell and just sell it and get what you can from this point. And if it does break the 105 area, then after that you have downside potential movement of about 400 to 500 pips that you can capitalize on this movement towards the downside. But from a long-term perspective, if I'm looking at this solely based off of what the monthly is doing, and how it's basically been ranging from 112 to 105 over the course of the last year, and saying the overall direction is going to end up being somewhere, I would say that it will probably end up being more bullish than bearish. So me personally, on if I'm just going automation wise, I will let it trade sales and I'll be fine with it. If I'm doing this and I'm trading it manually, I would say if I'm going to trade it as a sell position, I would look at selling. I will look at selling down to 104 as my overall position. My stop can end up being right around 109.25, which will end up giving me a very good risk to reward of 100 and I want to say 100 pips to go after 400 pips. So it's basically a 1-to-4 ratio based off of the move, which is a very good ratio to be able to sell. Now, what you're saying is you believe that the Japanese yen is going to end up gaining control. Now, what if the outside factors that are allowing that movement to be toward the downside? If both pairs end up meeting a peace agreement when it comes down to the tariffs and trade movements, then I think that's going to end up faring more better toward the U.S. as long as the U.S. does not have any other outside factors that's going to end up being toward the downside, which will allow it to be in consolidation. If it remains in consolidation, then I think it's going to end up moving toward the upside to 112. If you're looking at this to be able to sell, you would want more outside factors to be able to push this down. If you're thinking that it's going to end up buying and it remains in consolidation, if it's going to stay in consolidation, I think you're going to see more higher highs and higher lows up to at least 112 before it actually ends up hitting down again. So that's the U.S. Japanese yen. Once again, I don't see a position to be able to get in at this point. Last pair is the pound United States dollar. And I wanted to talk about the pound United States dollar last because of this reason. First off, we seeing that we end up having this huge movement towards the upside and breaking past the Fibonacci A and breaking past this huge pivot at 1.2680, which was the potential resistance area to be able to get in. So that means to me it's going to end up moving more towards these resistance areas right around 1.320. So that means if you was not able to get in here as a buy trade, at least this week, I think there's going to end up being some type of downward movement towards the downside. Then after that, pushing back up at least to 1.32. And from a long-term perspective, I think that that fairly could happen within this movement. Now, the pounds have been violent because of a few different reasons, and this is the reason why the pounds have been faring so well against the United States dollar, because of the Brexit deal coming up, and Boris Johnson and everybody else sitting inside of the table to be able to draft the deal, and they're saying that it was almost being done. Then, of course, the movement toward the upside was being pushed because of that deal being completed. However, on Friday, over the weekend, we end up seeing that the deal was not complete, and the deal is going to end up. They're going to end up making another vote at least to October 31st before they end up making a decision on if they're going to end up leaving, and if the deal is going to end up being completed. So that does scream out some movement toward the downside, at least earlier during the week, until outside factors and news and other economic stuff will end up pushing it back up. So from a perspective of what should I do for being able to trade this? Well, there's two different thought processes. If you trade based off of outside news, then I would say you got a high price, and and I expect there's going to be some type of retracement, and the retracement will probably end up going to 1.2680, and then from there, there's going to end up being a decision made from there. So you're talking about 270 pips more toward the downside. And from this 270 pips toward the downside, then after that, I think based off of what's going on with Brexit and everything else, then you'll probably end up getting that push upwards. So we could look to sell this and then after that, buy it based off of two different things. So because it's been parabolic, anytime that there's a real parabolic movement, meaning that there's just nothing but upward movement that is happening right within that point. As soon as it breaks down, it's going to break down hard, because if it goes up very violent, it's going to go down. It's going to end up going down very violent as well. Now, from it going down very violent, it doesn't necessarily mean it's going to end up making just a straight V and then going all the way down to a position. I do believe that it's going to retrace, and based off of history, we can tell and look and see that 1.268 will end up being a level where it could end up going down to first. And then after that, once it ends up hitting that 1.28 area, or 1.268 area, then after that, it can be able to move up more toward the upside, and then after that, push up to 1.30. So if you're looking at being able to trade both positions, I would say sell down to this number right here once you end up finding the high price and it ends up breaking the trend line. And then after that, once it ends up hovering around this area, you could target 1.268 just as an area of being able to get out. Your stop will have to be above the swing high, because there's really not a position for that as of yet, and where it can end up showing. Now, that swing high from a daily position has not shown up yet. So I would say you can look at a lower time frame, like a 2-hour time frame, to be able to see as soon as it ends up curling over where that position actually is. And then after that, make your decision about where the movement is. So this is what it looks like from a lower time frame. From this lower time frame, we have this kind of trend line that is right here. As soon as it ends up breaking that trend line towards the downside, then whatever the swing high is at that point, I would let that be the point of where I sell it. If you're very conservative on how you end up trading pairs, then I would say let it break. Once it ends up breaking down, more than likely what will end up happening is it will retrace, and it will retrace back up at least to this level, giving a high price in the sell zone again. And then after that, it will end up going down and then hitting this 1.2680 level first before it starts to move back up towards the upside, and then go out to 1.32. So a couple things that I want to end up saying. Once again, because this has been parabolic in the way that it has been moving, I believe that there will be a deep drop when it happens. Now, that will be a short-term drop that will end up being 200-something pips of that actual movement. Now, based off of the based off of the average true range, that may only be a day to 2 days of actual bearish movement, and there may end up being a gap because of the news of a delay that end up happening. Now, that probably won't happen until about 2 o'clock during London time, and that's Eastern Standard Time if you're looking at this video as we're speaking today. So that will end up being something to be able to look at. But if it does give her a retracement, then you can be able to sell it once it ends up breaking. Then after that, catch it on a high price and then be able to sell it from there. You have automation systems kind of like what I have, I would say wait for it to be able to sell down. Once it ends up selling down, then after that, you end up taking that position. And that brings me to the next thing that I want to end up showing you. This is True Trend. True Trend is a trend-based trading style system that I have created. And what it does, it only trades when there is a true direction of actual movement from that pair. So if you're looking at all of these candlesticks, you have blues, you have reds, you have black and white. So obviously in the black and white areas, you do not trade. In the blues and the reds, you end up trading in that actual direction. Once again, we'll end up having a dedicated video basically talking about this. But however, let's think about this. If you were to get in right when this trend actually was being traded at this particular point, then on this first movement, then you would end up making 379 pips. you want to end up getting in for the downside, and you might end up losing on this one. So let's say negative 65. But once again, another buy trade based off of this area, talking about 145 pips. Going up and taking this another buy trade. That's another 70 pips. Going right here. Probably would end up taking a loss, so 49 pips. But as we speak right now, it's up another 140 pips towards this upside. So you would have got all of this swing more towards this upside compared to going towards the downside and only trading in the safest trend that you could be able to get into. So that's the true trend system. Once again, we end up having a dedicated video that kind of goes along with that. Like I said, I'm very excited about the automation portions of what we end up doing. And once you end up taking a look at the video, and end up skipping into that section, if that's something that you're interested in, then we end up talking about it. But that's all the pairs that we end up talking about today. I'm very happy to be able to get done with this and be able to send out this video to everyone again. I know it's somewhat long, and I will have other videos that will end up being shorter, and we end up going there. But like always, make sure that you end up planning your trade and trading your plan. Everyone, y'all end up having a great week. Once again, you can like, share, and subscribe, and email me at cartercowcapital@gmail.com for more information. Y'all have a good one.